Good morning, RJ Baxter here, Fairway Independent Mortgage with your Saturday strategy. Wow, it's been such a crazy week. There's been so much happening. It seems like by the minute, by the hour, there's some new news coming out. There's something else happening, whether it's with the pandemic or the financial markets. It's been a wild and crazy week. So I'm going to talk a little bit about that this week. But first of all, I wanted to let you know that my team and myself, we are 110% plugged in. We are here for you to answer your questions and to help your buyers. Our focus is on you guys, our purchase business, and our buyers. We are not pushing them to the side to do a few refis because there is a lot of refinance activity, but our focus is remaining on making sure we're there for you. So I just wanted to first of all assure you of that we are right here on the front line with you guys, ready to work for your clients. Also, this video is going to be a little bit on the long side. I try to keep these strategies short so that you know it's a quick watch on Saturday morning, but there's a lot going on, so there's a lot to talk about, and I wanted to be there for you guys and let you know what's going on from the lending perspective on a couple topics. So the first one that I want to talk about is closings. Are we going to be able to close transactions in a week, in a month? I mean, heck, are we going to be able to close a transaction on Monday? We don't know. I mean, things are changing so fast. We don't know what's going to happen as far as closings. Are we going to actually be able to close the people that are under contract? So the first thing I did when I was putting together my ideas for this video is I researched what's going on in California, because if I'm not mistaken, they did a shelter at home order for the entire state. And in California, they did deem that banking is an essential activity. So what that tells me is, as far as from a lender's perspective, we should be able to still fund loans. We should be able to still send wires. We should still be able to complete the transaction. So that's really good news. The question on my mind is your title company going to stay open? Are they going to be still comfortable being there in the office to close transactions with your clients? Is your buyer going to be comfortable going to a closing? Is your seller going to be comfortable being there with other people? So these are questions that are going to come up, and I'm sure they've already come up for you in your business, and just things we're going to have to work through a transaction by transaction. But a hot topic along those lines that's been in the lending world for the last couple of weeks is e-closings. Can we do virtual closings where the parties aren't actually there in person together? And the short answer on that is, as of right now, no. Fairway, we do have an e-closing platform, but what they mean by e-closing is an electronic signature type platform, and it's still performed in person. And the reason why is because there's several documents that have to be notarized still, so we have to have a notary present. And also there's a couple documents still that have to be wet signed, so we have to be able to get the wet signatures of those. Now that could probably be, some of those could maybe be overnighted, but because of the fact that we have to have a notary there, we have to do the closings in person, unfortunately, still. Now there is talk of what's called a remote online notarization, and I don't have any more information as of when I recorded this video Friday afternoon, but this is something that's being talked about. It's a Fannie Mae enabled process, but we're not real familiar with it yet as far as how it actually logistically works, or if we can do it in all states, or if all title companies can do it. So there's a lot to work out there still to figure out if we can do that, but definitely it's something that Fairway is all over to figure out if there's a virtual way to handle closings moving forward. The next thing is speaking of title companies, is gap insurance. If you're not familiar with what gap insurance is, this is insurance in addition to the title insurance that covers the parties in between the time that the signing happens and the recording of the deed. So in other words, it protects a lender in case there's another lien filed between when the signing happens and when the deed is recorded. Because if there's something else filed in between there, like let's say a mechanic's lien, it automatically takes first lien position. So Fairway is definitely requiring gap insurance now. I'd be surprised if there's any lenders that aren't, because we're seeing counties shut down to allow in-person recordings, and a lot of them are shutting down even for e-recordings right now. So very difficult to get a deed recorded. So gap insurance right now is critical. Check with your title company to make sure they offer it. Most of the major title insurance companies, from my understanding, already have it as part of their coverage. The main title company we work with, WFG Title, who's excellent, by the way, they don't charge additional for gap insurance. So that's it's a critical conversation to have with your title company when you're talking with them about their plan for continuing to do closings. The next topic that's a hot topic right now is appraisals. Are we going to be able to keep getting appraisals? Are appraisers going to keep accepting assignments? We're already getting appraisers that are rejecting assignments and they don't want to go out into the field and inspect homes. We have sellers that don't want to let people into their houses. So this is definitely something that's an issue right now, or it's becoming an issue. Our turn times, luckily, are still very quick. I think in Denver, last time I checked, it was still 7 business days for an appraisal. We'll see if that increases, but there's talk in the lending industry about starting to allow drive-by appraisals in certain circumstances. And if you're not familiar with what that is, that's where an appraiser comes by, takes a picture of the exterior of the house to prove that it's there and that it's standing and everything. But they just basically base the value on data. They don't actually go into the house and measure and take pictures or anything. This would probably be only allowed in certain circumstances, like 20% down payment, for example, and excellent situations. But that's something that's being talked about, and we could hear something on that this week as far as if drive-bys will be expanded as far as when they'll be allowed. The other thing too that's a big hot topic right now is verbal verifications of employment. We always do a verbal verification before closing, within a week before closing, and it's a problem right now sometimes getting HR on the phone or getting a supervisor on the phone. So what we're doing is we're getting the cell phone of our buyer's supervisor or someone with HR so we can verify employment directly. So that's helping to circumvent a problem with verifying that employment. That's definitely something though to think about as we're heading towards closings here going into April. And the last thing I want to talk about is interest rates. I just want to touch on that real quick. Just like the stock market's been volatile, the interest rates have been equally volatile. The bond market has been bonkers this week. And a lot of that has been driven by some of the economic stimulus that's been going on and the Fed action. So first of all, the Fed action that happened on Sunday, when the Fed cuts rates, it doesn't mean that mortgage rates go down. If you haven't gotten this message already, the Fed is cutting a short-term interest rate, which is the overnight offered rate that banks use to lend money to each other. It's not the same thing as the 30-year mortgage bond. So we've actually seen rates go up this week. And a big reason why they've gone up is because of all this stimulus that the government's doing. So as the government does stimulus, they have to pay for it somewhere or somehow. So the way they pay for stimulus is they issue more bonds. When there's more supply of bonds, and if you don't know this, mortgages are backed by bonds. When there's more bonds issued on the market, treasuries, there's more supply, and it's just a supply and demand thing. So when there's more supply of bonds, the prices of bonds have to come down to entice investors to invest in them. More supply, prices come down. And when prices come down, yields go up and rates go up with it. So we've seen actually quite a sharp increase in rates, especially since Wednesday. So for your buyers that are out there pre-approved right now, it's very important that they're getting that message from their lender that rates have gone up. It could affect their maximum purchase price, and it's certainly going to affect their payment. And as far as strategy goes with whether to lock that higher rate now or to wait, that is something that your lending professional should talk with your buyers about. So just a little bit about what's going on with the market. Give me a call if you have questions about any of this stuff. We're definitely here for you. I am watching, my team's watching. Like I said, we are 110% focused on you guys and on your buyers. And we love answering questions about this stuff. We're living it every minute of every day. And that's all I got this week, guys. There's going to be, it's going to be completely different probably next week. And so we'll see how that develops. I might do a similar video next week as we work through this thing. But I'm here for you. And you guys stay safe, stay healthy. Please get your sleep, keep your immune system up, and be smart. And you guys have a great weekend. It was great talking to you. RJ Baxter, Fairway Independent Mortgage. I'm out of here.